Share my 44 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In tonight's video, I'm going to talk about the so-called, I'm going air quotes, disinflation that the entire market seems to have bought into, or so it would appear. Let's get into tonight's video. Well, folks, welcome. I know this is somewhat of a surprise, so the room is not filled up yet, but I'm going to go ahead and get into tonight's video, so you'll have to watch the replay if you're joining a few minutes late. I'm trying to keep this macro environment going from the channel. I'm not able to do the dailies, but make sure you subscribe. I'm going to do an advertisement right off while the room's filling up, is that you need to subscribe to the Substack newsletter. So it's kindlereport.substack.com. That will get you there. You can also go to kindlereport.com/newsletter and gets you to both places. So let's just go through a little bit of what's coming out this week. And we get the PCE numbers. I'm going to go through some detail here in just a few minutes. And what we're likely to see I think is going to be surprising to most people, or at least the dialogue that I have around this. We get real estate numbers this week. Real estate's actually softening. I've been pro real estate for the last couple of years, saying that we're not seeing any rollover. Well, we're seeing everything start to soften up pretty decent right now as the markets seem to finally be, I guess the higher rates are starting to actually really come into play. But I think it's still an inventory issue for most part. We're not going to see a lot of prices drop. But we're just looking at, we get new home sales, 660K expected. The other numbers to watch for this week are going to be the typical claims. And this will tie into some of the things I'm going to talk about as far as the Fed goes tonight, but claims are expected to keep upticking a little bit, 2.42, and continued claims were at 1.28. I expect those to keep ticking up. If you recall, going back over the last several weeks, what I've been talking about is that I expect to see unemployment, we'll get to inflation in a minute, see unemployment actually start to increase to about 4.2. I don't think it'll get much above that. It was at 4% last month. We'll continue to watch that. These numbers climb, and this is what the Fed's been asking for, basically, and they keep kind of floating out there that, we're expecting some softening. Whether it gets more expanded than where I'm looking at, or where I think there's similar numbers that a lot of Feds, participants have looked at. If you look at the dot plots, a lot of us are hanging around this 4.2, maybe 4.25, a little bit more than that. But those are coming out. We also get the GDP update this week, which is going to show, expected to show 1.3. I think last time, I'm going off memory, was 1.2. So that number is likely to be really not a big deal, since it is just kind of an update. The deflator I always watch pretty closely. For the most part, most people don't believe much in the deflator, but it's hanging around 1.3%. So let's get into talking about what I want to really discuss tonight. And I have been advocating for maybe the last several weeks, maybe last couple months, that I think inflation is going to bounce, but it's not going to bounce until maybe coming into late August, September, October. So we're not going to see these numbers probably before the election happens, right? So because all these numbers, we're looking in the rearview mirror. In June we'll get the May numbers, of course, which we just got, and then in July we're looking back 1 month all the time. But I think this is going to be somewhat interesting as we go forward. So let's talk about the PCE numbers come out on Friday. And they're expected, if I look at my notes here, bear with me for a second. Yeah, they're expected to come in Beautiful. I didn't write it down. They're expected to come in, I believe, about 1.2% or 0.2 up. And, I'm going to have to look this number. I apologize. I always have these numbers right on the screen for you. So let me just bring that up. I will have those numbers. So, what we're looking at here for PCE core 0.4. I got it right. Sorry about that. I thought I wrote all this down. PCE prices are 0.3 on, as far as the numbers come out. I don't see that being a big number. On the core, they're looking at 0.1. So there's no real effects from that standpoint as we look forward. But let's talk. I'm going to show you something on the screen, and this is why I believe the Fed is unwilling to come out and say, okay, we like the numbers, but we're still data dependent, because I think they're seeing what I'm seeing. I'm going to show you. I'm going to use my algorithms that I use on the data, and I'm going to do a replay because we're going to spin back to 2020. Let's do that right now. So as we look at the chart here, let me go off screen so we can see it. I'm going to run a script here because I want you to see exactly what is going on here. And I'm going to pause it here in just a second. So back in 2020, in August 2020, there's some Fibonacci projections. Now, these are part of the WaveTech indicator suite. And I want to show you how effective. I've been always wanting to do this. And if you notice, over the last month or so, I've been really illustrating how these are projecting numbers out. But we're looking at these numbers coming in quite a bit higher over time. So this was coming out in August. So inflation was starting to post out. But let's just watch this. The red dots that you see here are the forward projections on a month-to-month basis, okay? This is going to play in pretty quick here in just a minute. So as we look at this, you'll see all of a sudden we're starting, the blue line is the actual. We're coming up to, I'm just going to run this script all the way till it finishes here. And we're almost there to real time. So here we go. So this is why I wanted to show you this. Is what we're looking at, you can see the red dots here are projecting that PCE prices are going to continue to climb. I'm going to show you month-over-month numbers as well so we can kind of look at actually the year-over-year numbers here in just a minute. But what we're seeing is, it's just, look at this trend. I always talk about the angle of attack. Look at the angle of attack of prices to continue to climb. There is still a lot of that stimulus money out there. Who knows what happens with as far as the elections go, who wins, what happens. But this is just like crazy, crazy numbers. This is why the Fed, now I'm convinced, I've been talking about this for a while, but this is, in my opinion, why the Fed continues to go, we just can't lower rates yet. I mean, there's nothing, listen, these forecasts may be wrong, but the angle of attack and this trend is crazy powerful. And it doesn't look like it's going away. And I can even expand this out a little bit. You can see the only time in real terms, I did a chart. I don't think I have it available for this broadcast tonight, but I did a chart of showing what was going on with interest rates and how all the pandemic did was disrupt a little bit of the angle of attack because they shut everything down and then they pumped all this massive amount of money. We all know what happened in this scenario, right? There's not any of us that don't know what I'm talking about here. But I believe the reason why the Fed isn't doing this, because they see these numbers, they know that money is still laying out there, and even with doing, and they've managed to pull back a little bit on QT, right? If they continue to pull back on QT, this number is just going to continue to rise. And, they can go all day long, disinflation, CNBC, everybody's going to be pumping those numbers. You'll probably see some soft numbers for PCE. But I've been telling you this, and, I'm I guess, open to any kind of criticism you want to put it in the comments, on the replay if you're watching it, whatever. But the bottom line is these numbers aren't likely to roll over and have disinflation. And I think anybody that believes that's what's going on is not dealing in reality at the moment. So I'm gonna bring up a chart that you can't see. Just give me a second here. So let's go back to the chart. And this is the year-over-year numbers, and I want you to see the red dots that are on the screen here. These are projected, so it looks like we have a couple months of numbers coming in about a little softer than normal. Then there's a surge coming, and I talk about this a lot, what I call the echo bounce. And the echo bounce happens on every chart I've ever seen in my life. And especially after a big decline, big rally up, whatever it is, prices move big, they tend to overcorrect on the downside, then they correct, and then the next level, especially in numbers like this, you can see, as I look forward, I'll put a cursor out here. As we look forward, things start to stabilize, but we're talking July 2025, 26 is going to then maybe see some prices drop. But this is just the momentum of the level of the change. My cursor is still at a 1.5, 1.89, where my cursor is right now, with them so-called declining, still going up at almost 2%. And that's the Fed's goal, right? So let's go back to this other chart I was just looking at. We come back over here. Let me get off screen. When we look at these numbers here, this is just, in my opinion, this is what we're seeing. This is the continued expansion, and it looks to me it's going to be greater than 2%, even though if we go out about a year plus, it is indicating that we're going to slow down the rate, but it's going to stay well above there. That's why the Fed is not dropping the rates. That's not good. We're getting an echo. Okay, so let me come back on screen here. Yeah, so hopefully the echo is gone. I'm so frustrated. I don't crank up this machine like I do every day. But I just want you to understand that these numbers that are coming out they're just not going to be what everybody thinks they're going to be. That's my opinion, okay? So a couple more things we're going to go through tonight. I'm going to do a quick snapshot, which is absolutely amazing to me. I'm going to go through the WaveTech database very briefly. Like I said, I'm pitching the Substack newsletter because that is the best place to get my micro analysis. I'm enjoying writing that. It comes out a little later at night than I would like, but that's the way it is. I'm somewhat of a night owl. I love working late at night. So it comes out probably about around the London opening, maybe an hour sometimes after that. But just know that it's always out before the U.S. Open and all that. But let's talk just a couple more minutes about this, not only the PCE, but that the expectations for the market. So they're trying to build in this numbers of I think if you go to the Fed funds, all of a sudden they're looking at a September drop. So let's talk Fed for just a couple minutes. As the Fed is most likely, I still think they're going to be very careful about anything around. So we look at the meetings. They have a July 31 meeting. I don't think they do anything there. It would look too political, especially if Biden crashes and burns on the on the debate next week. That'll be interesting, and that would look very odd if they did something. September 17, 18 is the next meeting on the Fed. I don't think they do anything there. I don't think any of these numbers are they're going to see these numbers. I know they try to say, well, we didn't adjust our numbers when the PPI came out last month. Well, the reason why they're not adjusting their numbers is because they know what I'm telling you here to be true as far as the trajectory of the rates and how things aren't really changing that much. And they're very, with all the geopolitical risk and everything that's going on, I could do a whole show on that. That is presenting a lot of risk to changing any policy at the moment. And why would they change it? The economy's not failing, okay? The employment numbers are reasonably stable. I think they will increase. So there's no real reason for the Fed. They're not being driven by anything. And I don't think even if employment started to get really hit fairly hard, that they would be very responded to that, because I think they would welcome that, because they're worried, they want to see this demand on this money change a little bit. So I'm just looking at my numbers here, and so I'm saying disinflation is going to look like it's real until it doesn't, which would be more likely in September or something like that. Let's take a look at okay, let me just go for one last thing here, folks. This is live, okay? And I'm trying to put some things together here. So this is what we're going to do. I'm going to go through the database. We're going to take a quick look at the S&P just from a weekly basis. I'm going to go through Nvidia. That's just way too big of a story to ignore right now. And I think all of this is going to come together for you. I'll come back on screen after I do that. So let's go ahead and let's take a quick look at the database. All right, so this is a pretty amazing number here from the standpoint of what's going on. I've tried to blow it up just a little bit for you. You're looking at, this is amazing. The weekly database I keep expecting is going to get some selling. I have been expecting that for 3 months, okay? Not a thing happens. We're at 61.55. We basically have a rotation going, 208 new entries and about 300, there's a slight negative, but not much, 390 roughly sell signals coming in. No big rotation on the short-term database. It just continues to hang around. I'll pop it over there real quick at 51.59. This is a reasonable number to look at. So this is the way that I'm viewing everything from the database standpoint, as these trends are very stable. There's only a few of the sectors long. We have right now conglomerates, consumer cyclical, consumer non-cyclical, financial services, and utilities are long, and a couple of these are fairly new entries, but the sector rotation, this has been pretty solid, and we've seen some pretty decent rotation on the dailies as well. So that's something that I do on the Substack. I go through some dialogue for the database every day, and I know this has always been a big feature. I wrote for many years just to my institutional clients behind a firewall. I've done this, and this is a little more expanded version of what's going on here. Yeah, so this is, as somebody's saying, and I said this in Substack, as Nvidia goes, so does the market. But you're going to be disappointed, I think, when you see my Nvidia analysis. It's going to be just like the market, or very similar. So we'll get into that in a minute. So let's go ahead. I'm going to cover S&P, and then we'll get right into Nvidia. All right, so this is the S&P. This is a weekly chart. I just want you to take a look. we still have upward Fibonacci. If you look at the red dots that are on this page, let me blow this up so you can see it a little better. These are what's being forecasted. So we still have several weeks of still upward bias. The trends are very strong here on the intermediate level, and that's why the database continues to hang around this 62% level. It doesn't seem to get any selling at all, which is mind-boggling even to me. I've watched this database since 1998. I've been watching this thing week to week like I have, and I have a really good handle for it. But it's just one of those things. And I see people mentioning Apple and things like that. We could go through Apple. They're all in a rotation. There's going to be, I think, some secondary leadership come back into play because the money coming out of the Apple is going somewhere. So we'll talk about that. All right, so looking at this, if we look at the PPMs, you can see they're going to stay above 0.76. Now, this is a weekly, and I'll talk about this in Substack tonight. But this weekly chart is suggesting that we're going to stay positive, and this angle of attack of this 10-period moving average here is very strong. And you can see even the algo is projecting basically that we go sideways in, okay? So what I'm going to do, I'll come back on screen for a second here. What I'm going to do is we're going to bring up Nvidia because really this is a weekly chart. I'll go through all the micro stuff, like I said, on Substack. You can sign up for free. Wish I had a way to put a banner up here, but it's kendallreport.substack.com. You can sign up for a free version. I think there's 7. It's $8 a month, by the way. It's not a lot of money, and it's much better than I'm not going to take off the YouTube ads because then they don't show to you anybody if they can't make any money off of your YouTube channel. But I would much rather focus my time in on that Substack, and it's something that you can do. And if you, it's amazing because I look at the Substack results on there, and very few of you're all reading it through email. And I would use the Substack app myself because you can just play it. It will actually read it to you. So if you're in your car or doing something, you can put it on the earbuds and get them everything and look at your phone. So anyway, back to the markets. What I think we're going to see here on Nvidia, and maybe I'll do a quick run through Nvidia, Apple, maybe do some stocks real quick. So I'm only 22 minutes in, so we've got time to get through some stuff. Yeah, thanks, Guy. I appreciate that. So let's go ahead and let's go into the take a look at Nvidia. I want you to see that. So we had the big reversal last week, and this is important. If you read through, if you were following me on Substack, and even on some broadcasts that I've done on YouTube over the last several weeks, I was projecting back when we were at 1,000 that we would go to 1,300 to around 1,500, and that now, because of the 10-to-1 split, is 130. So we actually printed up to 140.76, and this is where we got the big reversal. And I believe this was a significant reversal that happened. As far as the so-called bubble bursting, I'm not sure that's going to be the case, but let's let me move over to this other side here. But yeah, so I don't think the bubble maybe has not burst. The trends are still up. We've got a lot of what happens when you get into these parabolic curves like this, is the markets will start to go sideways. I believe when we get the print, the market grid has not updated on this, but it will turn down, and we'll start to set up one of these, what I believe will end up to be a dragon head. And if those of you that have been in my live trading room, you'll know what a dragon head is. They typically will resolve themselves to the upside, but this is actually being projected to be probably a we'll say 4 to 6 weeks minimum, maybe as much as 8 to 12 weeks, or we're going to see this sideways move into this 10-period moving average. So let's take a look at the PPMs below. And even when we come over here, because of this crazy parabolic curve, if I come over here to all the way out into August, they don't potentially turn negative. This is a projection. This is not real. If the market starts to just go sideways, as I'm suggesting, then probably all the algos will start to adjust as well. So we'll see what comes out, and probably this will have to be a regular staple of the coverage, because I think I mentioned in the Substack the other night that what we were looking at is that I think it was roughly 0.34%, we'll call it 35% of the move to the upside in the S&P, or about 5.3 of the move. 30% of the move on the S&P has been Nvidia. Okay, so this is a significant thing to watch, and it looks like what's being projected here is some kind of sideways movement. We did get, and I'll cover this right now. I'm going to bring up a daily chart, and we did get an outside reversal the other day, and the Substack said, can we get a confirmation of that outside reversal? And we did. We closed lower. So we've got some parameters really close for you to watch. So let me go to the daily chart here, and we will set this up just a little bit better here. So let me go full screen so you can see this. What's interesting about this chart, this is the daily chart, is that we've got the confirmation, but we're trading right on this 10-period moving average. I'll show you a couple things. Any of you that know. Interesting. I will fix that. Got it. Thank you for the heads up. Should be no echo. I think there's a mic or something turned on that other one. Perfect, thank you. So what we're looking at here is that let me know that that's the case. Yeah. Got it. I know what's causing it. I won't come back on screen on that view. So what we're seeing here is that this is being projected to come back in. The angle of attack of this 10-period moving average is fairly substantial. Let's look at it. It's at 0.43. So there is a bit of support that is going to be around that number, which is going to be 127. I talked about 126 on the Substack. If you notice where we closed right at 126.57, and the value on that 10-period moving average was 127. So it closed just below that, but you can see the algos are projecting that we're going to come back into maybe around 130, 132 again. So we're going to get that maybe a right shoulder. We'll see what happens. But let's go back to this 3-day trade. So when you get this outside bar reversal, especially at an all-time new high, this is exactly what you want to watch for. Is you get this big reversal, you close lower. So the key value for today to determine where the stop, if you were short this stock and carried it through, the key level to watch is going to be 130.63. The algos are saying this is going to come back in. We'll see what's right. But if it holds below 130.63, and it does not have, but it has to render a new low today. So on Monday, so it needs to trade all the way down to 124, something below 124.30. If it does that, it doesn't have to close lower, but it can't go above that 130.63 either. So that's got to be the range. If it takes out that upper number, then the trade is off. You're probably going to see the echo bounce, which is being projected by the algos right now. So what that suggests then, so I believe going to this screen is okay. What that suggests is that we're going to see probably an echo bounce both on the S&P and Nvidia, because this is going to control the sentiment for these markets right now. I'll bring up NASDAQ. Yeah, and somebody's going never short Nvidia. Yeah, I would agree on that. There are some short-term ideas that are on there. Matter of fact, I'll bring you back up on screen because I'm going to show you the monthly algo projections, and that will, who was that, Oleg, that will absolutely show you exactly what I'm doing. So let's do that. Let's go back to the chart. And what I'm going to go to the monthly. Look at the monthly projections for Nvidia. All of a sudden, doesn't feel so difficult. Let's draw something in. I'm going to draw in just so that we're all looking at the same things here. This is where it's being projected, but look at this angle of attack. You folks, anybody's been around this channel for any length of time at all knows that this is the trend. And this is a monthly trend or a cyclical trend, which does not go away. So we have a lot of catch up where we could go all the way into well into 2025, and these values are just going to keep going up into this pattern. At some stage, you're going to get this. At some stage, you're going to get some sort of movement. Maybe if market grid will come in and this will start to happen. I'm going to can this stuff. Let's try to draw this. So market grid is probably going to do something like this ultimately, and then we get a range that sets up in this level here where the market starts to consolidate into this rising moving average here. So trying to draw this in, and so this angle of attack will come into play. We'll get some sort of consolidation, maybe right now. The algos are still suggesting multi-months of higher prices all the way into 200 plus 220. I'm not sure that's what will happen, but I'm fairly sure that at some phase we'll get a pattern here, whether it started the other day on the reversal or not. It looks like we will get something like this ultimately. So let me just take this out. Yeah, some stage we'll get some sort of movement into this angle of attack here. This is pretty typical. I've been through a whole lot of these patterns from the standpoint of as far as these parabolic curves. These things have been around forever, and on these monthlies, they can get very wild price action. So it looks to me a couple things. I'm going to bring up the S&P here just to compare this. So let's go back on screen. So this brings up an interesting scenario for the S&P, and this was and we'll go back and let's see what time I got. Yeah, 34 minutes. Let's just make this really about some of the Meg 7 and talk a little bit about that. But you can see the projections are for us to go sideways in all the way into the first of the year. The projections into September, November are for higher prices for stocks. And this is likely to continue. Now, we're at the 23rd, we have basically one more week of market action to go through, and that where the 56.16 is the extreme plotted for this month. I suspect if we remain above the, let's say 54.65, that's just a guess number. I don't think we get below that by the end of the week, but we're going to see the market grid continue to expand to the upside. And so these numbers that you see here, these red dots, which are the algo projections, are likely to be the path that we're going to end up on as we come into August and September. And if you think about what I'm telling you here, is that this inflation bounce, whatever you want to call it, isn't likely to happen until after September. And it'll be interesting if I am right. The Fed sees these numbers. I know they try to act like they see the reports the same time you do. There's no way that a phone call over to the Commerce Department or whomever has the reporting responsibilities aren't talking to the Fed. These guys don't talk all the time. They do talk all the time, and they know these numbers, and that's why I spent so much time tonight just talking about the possibilities on what's likely to happen with the whole PCE and inflation in general. I could do the whole video tonight on those numbers, but I think I've got the point across. So let's do this. Let's take a look at Apple. Let's take a couple of other examples of what's likely to happen that's going to basically affect these indexes and the trends as we come into really the end of the month, coming into July. And I've been talking about the summer rally going back into May, when it was very obvious we weren't going to get follow through on the April rollover. All of a sudden, the bid came back in the market. But I think now, and I'll try to define this the best I can as we go forward, especially on the excuse me, I paused. I get a loud vehicle out front of my office. But especially as we come in through the summer, I think we will see some rotation. So let's take a couple look at some of these stocks that I think will be in play here. So this is, we're going to stick with the monthly charts here for a minute, is that you can see this almost looks like the trajectory on the S&P, where we're looking at some higher numbers here from the standpoint of the projections from the algos. But if I bring this down, you'll see all of the PPMs are still forecasting stronger numbers. This is a monthly chart. Let's go to weekly, and you'll see a little flatter response, but you still see after this coming week, we should see an uptick. We're going to keep an upward bias on Apple as well, and it just doesn't look like anything's about to roll over there. Yeah, and we can go through some other stocks. And Druckenmiller's long IWM. He's good. Hey, why not? But I don't think, and maybe we can cover that. What do we got here? Yeah, 38 minutes. We got 20. I'll stay on for about an hour tonight, so we'll continue to kind of interact here, interact with you folks. But yeah, IWM's not a dead Indian, but it's not going to bounce as big as everyone thinks. The premise that it will bounce is that interest rates are going to go down. And maybe we see, and I talked about this in Substack the other night, we could see the 10-year get down to about 380, maybe. It's pressing it pretty hard, and then you're going to see a rebound. I still have like I said, if I'm right about this echo bounce on inflation, then rates are probably going to come back on the back end. I went through a fairly decent explanation the other night on Substack on the yield curve, what my expectations are. And I am looking for the front end of the curve to come down, so the Fed to lower rates sometime in 2025. And possibly I'll see if I can, let me see if I can find something here. And if I can find it fairly easy, then I will show you a chart that's on here. I'm just trying to find a chart that I used in a database the other day. Bear with me, I just want to look through this because it'll be worth your wait. And one more shot here. I'm just coming up a negative here. What I was going to show you is the forecast for 2025, in that the forecast is that we're going to start to see rates start to decline. My expectation here is that we get down to probably 375, 325, so 2% drop on the Fed funds and a repo on the front end of the curve. And meanwhile, the back end of the curve is going to stay flat. It's not going to go down with it. We're not going to stay inverted. The inversion will come back. And they're not going to lower rates because of the expectation of anything like a recession or anything like that. I don't believe I think if rates were free floating on the front end and the Fed was not holding them artificially high, and I've said this in Substack, that I think right now 5.25 is not where rates would be if the market was able to adjust to rates. They'd be closer to that 375, 325. The back end of the curve would still be 425 plus, and you'd have a normal steepening curve where you go from left to right, and the short end of the curve is lower than the right. Otherwise, the inversion goes away. The inversion is a false inversion right now. It's not. When people talk about the yield curve being inverted, in the past when we've had inverted yield curves, I've lived through them, is they are because of market forces are causing things, not because the Fed is artificially holding them. And the chart I wanted to show you is when they go flat, they held, I think it was 17 months, they held it at 0.25 when they should have been 2.5% rather than at 0.25. As soon as they let them free float, they went to 0.25, and then they continued to raise the front end of the curve. And that's how we got to 5.25. So if we're looking at rates being driven by market forces, it looks a lot different than where the Fed's keeping things. But if you watch this whole show, and you can connect all the dots that I'm talking about here, is I think they still see inflation a long ways from being over with, even though markets, you're probably going to hear disinflation maybe after the PCE numbers on Friday, that they're as expected, maybe lower. That whole story is going to build, and I don't think it's going to be the real story as we go forward, because we're going to get this echo bounce. I'm very sure of it, and that's why I keep pushing it for months. And those of you who've been around the channel now, I don't always go with the consensus of the markets. And the Fed funds, by the way, that the Fed fund futures are the worst indicator of anything. If you remember, they were forecasting 6 or 7 drops this year. There's been 0. They've been completely wrong. Those things are almost always wrong. All those are measuring as market sentiment that have nothing to do with when the Fed is going to move. And like I said, if you're just trying to tie everything together that we've talked about tonight, is that really what I see is that the Fed is going to hold until they see this, whether this bounce comes, how big it is, and I think they could hold all the way into Q1 of 2025. My estimate is that the first decline will be at that December meeting, which I don't think, it's interesting because the election is November 5th. The Fed meeting is the 6th and the 7th. So 2 days after, if they lower the yields, if they drop rates at that time, and we know the outcome of the election, that's going to be a very interesting data point for them to make a move on. I think the first time is probably the December 17th and 18th. Maybe it's a Christmas present, but like I said, I'm looking for declining rates probably into 2026. Yeah, let me just look at a couple of things. Yeah, that's funny. Somebody's mentioning meet Kevin. Kevin's becoming kind of my new Jim Cramer. So one of the things that you're not seeing, and let's bring that up. That's a great catch there. Let's go to the charts. Let's take a look at the Dow. Dow is being forecasted, this is on a weekly basis, to be stable and then start to climb again. I don't see that there's going to be any Dow weakness. And in fact, what my entire premise, a couple things, and I did a video on this the other day, is that there never was any petro-Dow agreement. It was, matter of fact, back in 1974, those of us that were around then, especially in America, there were gas lines, and you can only buy gas based on your license plate, even in odd days, and you could sit in a line for an hour and they ran out of gas at the station you're at. But after that point, they made a deal. Basically, they said they would, transact in dollars, but Saudi's been accepting other currencies forever. The whole petro-Dow has been kind of a dialogue around that the reserve currency. The U.S. dollar is still the most widely used currency around. It's not going to be replaced by the BRICS. A lot of folks still use the SWIFT system other than Russia, who's been blocked out of it. So if you're going to get insurance, do shipping, do anything internationally, you're probably still going to price in dollars. Not only that, the futures contracts that trade way more than the deliverable oil are denominated in dollars. So everything's still Dow from that standpoint. So I don't see that even being a thing. It never was a thing. And the fact that we are the largest producer, do we buy oil for them? So if that's the case, maybe that's probably the only thing that Kevin and I agree with on this, is that it's not a big deal. But the concept that somehow still carrying forward is some folks think this is going to affect the Dow. I don't see it affecting the Dow at the levels that it's going to be this complete collapse. I have some ongoing debates around folks that I know that are talking about how the DC is going to be, backed by gold, and they're going to replace gold and all that. Maybe it's kind of far-fetched. I don't think that's what's going to happen from that standpoint. But what we're really looking at here is this is a nothing burger from the standpoint. It's something that the markets want to talk about. And it's interesting because this conversation's come up even with non-market people that I know. They're asking me, hey, what does this mean? Is the Dow going to collapse? All that stuff. The Dow is not going to collapse. And there's really, from the demand on dollars, is not going to change a lot. So it doesn't matter. So the only problem with China flipping is they're not going to be able to produce electricity and all that. So that's kind of they got a few more bodies in cars, but it'll be interesting, Anyway, I know the whole EV thing. I'm constantly on X in I guess dispute with the whole EV thing. I think you're seeing the failure of EVs right now. I know China's pumping them out, but they're doing them for they're crushing everybody in cost. But I don't want to get into that conversation. But I appreciate there is no electricity. They're not fossil fuels or hydrocarbons, and there's as much of this stuff. They're pumping more oil today than they ever have, and demand is still rising. And even though you would hear the opposite, that somehow EVs are not. I think the numbers are they're going to make 90,000 roughly new ICE vehicles this year, and I think the total production's around 2 million, maybe 2.2 electric vehicles. And if you notice, if you turn on mainstream TV, the only thing you see advertised is electric vehicles, because they're desperate to sell these things because nobody wants them. And as soon as you get away, like if you go down to Scottsdale and Phoenix, there's a lot of them there. But you have to understand that Phoenix is the greenest city on the planet because it's nuclear powered and hydro powered. That's where the state of Arizona gets their energy source. There's a giant nuclear plant outside of Phoenix, and you've heard of the Hoover Dam, and we have the Salt River Project, a lot of hydro here. So I don't think, maybe in some corner there might be some gas-fired plant, but it serves very few people. The major populace of this state is just all nuclear. So if you're driving a Tesla, which you'll see a fair amount of them down in Phoenix, they're real green vehicles. Everybody else is kind of fooling themselves. So anyway, enough of that. Let's see what else we got. Yeah, I love this guy. Yeah. I'm an energy expert. Yeah. That's funny. Yeah, all you have to do is look what's going on. It's pretty easy. Yeah, Lake Mead is up about 20%, by the way. So that was last year's story. Anyway. Yeah, so I don't want to get into this. I know there's a lot of people, global warming people around. So, but let's get close to ending this thing. So, here's the deal: markets aren't going to collapse here. There may be some downside. I'll cover it in Substack on the details. Nvidia is probably going to come back in, go sideways short term. Longer term trends are so powerful. And if you look at everything that's related to AI is not a bubble. It's not going away anytime soon. And I guess the best way to put it, some of the products and things that is going to come out is going to be huge. And I will tell you, I'm going to find this company. I have it on my computer in my home office. But I will bring it up. There's a company that does these micro-nuclear. They actually fit in the back of an 18-wheeler, and they will power the data centers. It's going to be kind of hard to, maybe they'll end up powering some of these other things that maybe some of the EVs, maybe they'll get powered. They could put one of these things in an area where I live at. There's about 120,000 population. They could power on one of these little micro nuclear plants could power this area, no problem. So modular nuclear is probably the right answer. I know Elon is always pushing for solar, but he owns a solar company and a battery company, so why wouldn't he? Everybody talks their book, and that's pretty obvious, I think. And but for the most part, my expectations is that we're going to continue these patterns that we've seen. Looks like we've got positive flow into September. Like I said, get the Substack. I'll get that all laid out after I do one of these rants, like I do this on YouTube. Usually brings up a lot of stuff. Yeah, so just say no to fusion. Yeah, exactly. Yeah, the answer is nuclear, folks. And it's sort of, nuclear, probably hydrogen is a much better deal. I know I'm big on Toyota's hydrogen piston engine. They're not producing electricity. They're actually producing something like 400 or 500 horsepower from hydrogen-powered piston, naturally aspirated vehicles, just like any ICE vehicle. It's very interesting. And I know the infrastructure isn't there for that as well, but I think it's a lot easier than trying to dig up the planet to get enough cobalt and other materials that are going to be necessary to make all the batteries, which are going to die, and then there's going to be recycling. Yeah, I get how the planned obsolescence is all in play on electric vehicles, but I don't think it's good. You're not going to see, like, I live in an area where there's a lot of old classic vehicles. You're not going to see the 50-year-old Tesla running around with new batteries. Maybe, but not very many of them. Anyway, I bet that's interesting, Leo. They've always, Floyd's Garage, you're right. They're always talking about, 3 Mile Island with false information. These new micro, man, I'm upset that I don't have these numbers. I'll try to find it tonight. Maybe I'll do a little segment tonight in the Substack and talk about this. But there's a couple companies that if you Google mini micro nuclear plants, there's a couple companies that are deep into this, and there's only one, I believe, that has gotten approval so far. But this is a really interesting segment of the markets because we're going to need a lot of electricity, and the war will be between EVs getting them and the and AI, right? So, and AI, I mean, there's a big fight. It's worse than anything that relative to water, wars. This is going to be the big war. So there's a lot of other alternatives to do this anyway. Yeah, and I've seen the ammonia engines as well from Toyota. It's pretty amazing. Yep. I love the comments here, folks. I really do. I'm just looking at a couple comments. We're going to call it quits here in just a minute. Yeah, it's funny, Leo. That's very interesting. You may be aware I used to live in Melbourne, so it is. Yeah, who is this guy? I wish we had some Smurfs around. EDG. Fake Bob. Yeah, he must be new around here. That's okay. Anyway, folks, listen. We're getting kind of too off the map here, so I'll just tell you and get the Substack. I'm not sure what my videos will be the rest of the week. I cover a lot of details here, especially in the front end of this video. So if you made it this far, make sure you hit the like button, subscribe. Also, should have mentioned this like an hour ago, but we have a special on the indicators. So if you're hanging out and you haven't got the indicators, get them. I think 347, and there's an extra 50 bucks, 6 hours of training that I did back in November that you can get. But sign up for those things. Probably 4th of July-ish in the next couple of weeks, that's going to go away. So I appreciate everybody. We've had a lot of interest in that, so make sure you do that. So let's call it quits. Appreciate everyone watching tonight. We'll talk to you soon. Thanks a lot. I think we need some new Smurfs. Thanks, Floyd's Garage. Appreciate it.